Today, I want to talk about how many hedge funds are just days away from being liquidated, especially with the recent market dip and with shorts verifiably still doubling down on AMC and GameStop. So stay tuned and let's make some money. I want to dive straight in with the key information and start by talking about this article titled "How Many Hedge Funds Are Just One Margin Call Away from an Archegos Style Implosion." Kristen tweeted this article saying how many hedge funds are a margin call away from an Archegos style implosion, answering saying we don't exactly know yet. Just like Archegos caught many by surprise, there could be tens if not hundreds of hedge funds in the exact same position. It says given the limited insight into hedge fund borrowing and derivatives trading, there's no way to know exactly how many hedge funds are just one margin call away from a collapse. Actually, the entire Archegos collapse was actually caused by just one individual stock, which sold $3 billion worth of new shares, dropping the share price. Saying it was literally one company, yes, a big one, but it suffered a decline in share price, causing the Archegos liquidation. That caused a $20 billion fire sale, with banks selling massive chunks of stock of Viacom, CBS, and other companies to cover the Archegos shortfall. Over the last few weeks, the S&P 500 broke downwards out of this channel as a result of the Japan carry trade. It caused the S&P 500 to drop by around 10% over the last couple of weeks at a time when all hedge funds are massively long on the market and have the most market leverage they've ever had. So when a hedge fund is 2 times, 4 times, 7 times, or even 10 times leveraged, even just a small drop in the overall market can cause liquidations to even the largest of hedge funds. If the S&P 500 can't continue filling these gaps and again turns around and continues falling for the next leg down, we will see hedge fund liquidations. Something that could cause the 2021 Archegos collapse to look absolutely small fry in comparison. As I said, especially at a time when hedge funds are also doubling down on GameStop and AMC short positions, but not directly through AMC and GameStop, but indirectly. So this is verifiable short position data on GameStop and also many ETFs that hold GameStop and AMC as well. I say verifiable in air quotes because this data obviously comes from the self-reported short positions from these hedge funds and likely covers up just how bad their true short positions actually are. But what this first chart shows us is that short positions on GameStop have actually remained relatively neutral over the last couple of years. But what this chart also shows us is that short positions in ETFs holding GameStop and AMC have continued rocketing to new all-time highs through 2021, 2022, 2023, and now 2024. So that means that actually verifiably short positions are still doubling down on GameStop and AMC shorts. Yes, they're trying to cover up their short positions in the stock directly, as this here is the GameStop short data, but they're not covering it up in the ETFs. And as you can see, the ETFs plain as day are still showing short positions skyrocketing. So these shorts are actually still becoming more and more and more exposed to GameStop and AMC. And the French AMC ape has used ChatGPT to explain what will happen to these heavily shorted stocks if the S&P 500 does continue falling. It says in conclusion, the reaction of heavily shorted stocks in today's market during a crash could be extremely volatile, influenced by a combination of high-frequency trading, complex derivatives, naked short selling, and the potential for retail-driven short squeezes. The presence of these modern financial instruments and market participants could lead to both sharp declines and then sudden unpredictable rebounds. So again, just like the famous historic Volkswagen chart shows, at first a decline with the whole market and then a short squeeze / gamma squeeze. I also wanted to go through Moomoo's new and best ever limited time offer. You can currently get up to 20 free shares when you sign up for Moomoo and also a boosted interest rate on your deposited cash. You're not just getting 5 free shares, you're not getting 10, you're not getting 15, you're actually getting a total of 20 free shares, 8 free shares if you deposit $100, and 12 free shares if you deposit $1,000. But on top of that, you also get an interest rate of 5.1% base rate on uninvested cash, and also a 3-month bonus of an additional 3% on top of that. Meaning you get an 8.1% interest rate on your uninvested cash held at Moomoo, as well as all of these free shares. Importantly, Moomoo now also has a cash account as well as a margin account, so you can switch to that cash account and turn off your share lending. So guys, be sure to join Moomoo using my link in the description below. And this is why the hedge funds and the shorts and their mainstream media counterparts are now telling you not to buy AMC stock, but instead just to buy AMC options. This is likely a short-term desperation move to try and convince you to buy way out of the money, crazily priced call options so they can steal your options premium. Obviously, because these hedge funds need extra cash to buffer up their margin requirements and capital reserves. Especially as the market has been falling over the last few weeks, they need additional capital to continue topping up their dwindling account balances. If the market falls and their portfolio drops by $5 billion, but they can steal an extra $5 billion from us retail investors, it effectively puts them net on the day. And that's exactly what they're trying to do, desperately trying to convince you to buy way out of the money calls. And this is also happening at a time when GameStop is now 50% cash. It says according to the most recent SEC filings, the company actually has enough money to buy back the true public float of the company. GameStop can not only perform share buybacks, but could shrink the float to such a small size that it actually exposes the corruption. Both GameStop and AMC are improving as companies, reducing debt, building cash buffers, improving revenues, decreasing expenses, and building profits. These are two companies that are on their way progressing into becoming successful companies that will just continue growing year after year after year. Especially with the Q3 running through September, that's likely going to hit $2 billion just by the end of August, before September has even started. We could actually be on track for a $3 billion quarter, the largest quarter ever recorded at the box office. AMC had a tough second quarter, but is setting up for potentially the best third and fourth quarter it's ever experienced. Also guys, if you haven't already joined, there's also a link in the description below for the Millionaire Mindset Trading Group, the group where I provide buy and sell trade alerts, where you can see results like these. On that big gap down we saw last week, I alerted the group that I was buying put options on the Friday before the gap down happened. CAS held over the weekend for some massive results, a 1,200% gain. CAS made over $12,000 in just one singular day, holding these S&P 500 puts. And what I think is potentially the most telling thing of all is that Renaissance Technologies, which is one of the greatest hedge funds of all time, just increased their AMC position again by 18%, as well as their GameStop position. Renaissance Technologies first bought shares back in 2021 and 2022 at over $300 per share, and has just continued to add to their position. Renaissance Technologies is now holding over 10 million shares of AMC. Again, as I said, Renaissance Technologies is known as one of the greatest hedge funds of all time that searches the market for specific events that others are not prepared for. So clearly Renaissance believes a massive short squeeze is incoming and that it will be over for the shorts. And clearly that is what they're planning for, as they haven't ever sold their AMC shares, just continued adding more and more and more. They've just averaged down, they've continued to hold, and they will continue to hold until the squeeze happens. And again, Renaissance isn't the only hedge fund continuing to build their position in AMC. Practical Stocks tweeted, as AMC has just got some new institutional investors, interestingly, Mudrick Capital and Discovery Capital. Again, Mudrick famously sold their shares just a few days before the June 2021 run-up. So this could potentially be a very interesting position to keep an eye on in case Mudrick do sell and a couple days later the squeeze happens. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.